Japanese traders love three things: sushi,
So good.
sake, and Heikin Ashi. No, Heikin Ashi isn't a fish. It's actually a very specific way that Japanese traders analyze charts on their trading platforms. There's a reason why many experienced Japanese traders have quietly abandoned traditional candlestick charts for something cleaner, smoother, and often more reliable: Heikin Ashi charts. To understand why Heikin Ashi charts are so valued in Japan, you first need to know what they really are and how they differ from standard candlesticks used by most traders. Heikin Ashi is a Japanese term that means average bar. Unlike traditional candlesticks, which use raw price data such as open, high, low, and close, each Heikin Ashi candle is calculated using a formula that smooths out price movements. This removes market noise and makes trends much easier to see. Here is how the formula works in simple terms. For each candle, the close price is the average price on that candle. So it does the average of the open, the high, the low, and the close price of the candle. So the close that you see on each Heikin Ashi candle is actually the average price of the current candle. The open is the midpoint of the previous candle's body. So if you check, you can see that each candle opens at the midpoint of the body of the previous candle. And this is like this everywhere. So if you can see here, we see that it opens right in the center, in the middle of the previous candle's body. Then again, this one here opens right in the middle of the previous candle's body, and so on all the time on every Heikin Ashi candle. And finally, the high and low of an Heikin Ashi candle is simply the most extreme price between either the open, the close, the high, and low of the current period. The result is a chart that filters out many erratic price moves and highlights the direction of the trend. When you look at a Heikin Ashi chart, you'll notice that during a strong trend, the candles are almost all of the same color and very rarely have wicks on both sides. And that's intentional, because it provides a much clearer visual cue to stay in a position longer and avoid exiting in a panic due to short-term noise. In other words, Heikin Ashi doesn't just show you where price went, it helps you feel the momentum driving it. And that's not magic. It's just math and more intuitive visual storytelling for traders. Interestingly, Heikin Ashi was invented by the same Japanese trader who originally created the Japanese candlesticks, which are still used by default today on most trading platforms. But once you start viewing your charts in Heikin Ashi form, it can completely change how you interpret market movements. So why do Japanese traders love it so much? First of all, the average volatility of Asian stocks, whether in China or Japan, has historically been much higher than that of Western stocks. In other words, Asian stock movements tend to be much larger and more powerful. Therefore, to ride these large momentum-driven moves for as long as possible, it's crucial to eliminate as much market noise as possible. And that's precisely what Heikin Ashi does. Because, for example, in an uptrend, as long as the bullish color is maintained, it means that, mathematically speaking, both price and momentum are still rising, even if an occasional candle goes against the trend. With Heikin Ashi, traders aren't bombarded by every tiny price fluctuation. They simply see whether, mathematically, the current candle's price is higher or lower than the previous candle's calculated price. And as long as that uptrend continues, the color doesn't change, giving you a smooth visual of the price over time. I also like to think that the widespread use of Heikin Ashi charts among Japanese or Asian traders in general resonates with the traditional Japanese philosophy, where clarity and serenity prevail. It's as if Heikin Ashi helps you think less and act more decisively. When a trend is in motion, you stay calm and zen until that movement truly weakens, mathematically speaking. It's actually like the complete opposite of constantly second-guessing yourself, where with regular candlestick charts, you would see a bullish candle, bearish candle, bullish candle, bearish candle, bullish candle, bearish candle, and all that visual contradiction. Whereas Heikin Ashi brings a sort of soothing rhythm of bars that tell you, stay in the current move, it's not over yet. And I'm convinced that for Japanese traders, that calm and mental energy conservation that Heikin Ashi provides by smoothing out price noise, it's invaluable. And by the way, Heikin Ashi has existed for centuries. It was created in Japan long before modern trading platform. Yet it's still used by one of the most advanced trading communities in the world. And that says a lot. It shows that it's not just a trend or a hyped up tool. It's a timeless technique. Experienced Japanese traders do not love Heikin Ashi because it looks nice. They love it because it works. In fact, it perfectly matches their mindset. Be patient, be clear, and trust the math. To show you how much Heikin Ashi reduces cognitive load to interpret price movements, let's compare two charts. A standard candlestick chart and a Heikin Ashi chart. Let's look at the price movements of the Xiaomi stock. Here on the left, I have a regular Japanese candlestick chart, and on the right, I have a Heikin Ashi chart. Let's, for example, look at this up move right here. As we can see on both charts, of course, the price went up because it's the same stock. So no matter how we display price, if the price goes up over a certain time period, it will also materialize on both charts. But if we decompose how this up move happened, we will see that the information given was different on these two charts. So for example, on the regular candlestick chart, we can see that this move took 34 bars. So that's 34 hours of price action since I'm on a 1 hour time frame. And out of those 34 bars, 14 of them were bearish bars. That means that 40% of the bars in this up move were counter trend to the direction of the move. And that's almost half of them. And each of these counter trend bars was potentially opening the door to contradiction and second guessing the up move. Whereas the same move on the Heikin Ashi chart, so it also took 34 bars, but here only 7 of them were counter trend bars. So in other words, there were way fewer bars on the Heikin Ashi chart that could have led us to believe that the move was over. So on the Heikin Ashi chart, the bullish bias was way easier to maintain because mathematically, thanks to the formula of the Heikin Ashi bar, most of the time on this up move, the price and momentum were still kept bullish. Therefore, it was much harder to question the up move on the Heikin Ashi chart than it was on the regular candlestick charts, where 40% of the candles were counter trend. And if we also look at the move that followed this down move right here, it required 23 bars. And on the regular candlestick chart, 9 of them were bullish bars. So you see, it's kind of the same ratio that we actually had in the move before, where 40% of the candles in this down move were actually bullish candles. Whereas on the Heikin Ashi chart, we had a minority of them being bullish bars, only 4. So here, once again, the bearish bias on this move was easier to keep and maintain on the Heikin Ashi chart. And this happens almost all of the time. This also goes on the rest of the moves that followed after that. The Heikin Ashi really helps eliminate as much market noise as possible. And by market noise, I mean all those little counter trend candles that go against the direction of a current move. You see all these little bullish candle in a move that's actually going down. Same thing here. Well, on the Heikin Ashi chart, almost all of them are gone. If we now look at the Hitachi stock here on the 1 hour time frame, well, first of all, we can clearly see the volatility of these price moves from one session to another, but also we can see all this erratic mix of bullish and bearish candle, each seem followed by the other one. And overall, this looks chaotic and very hard to read. But if I now look at the same movements on a Heikin Ashi chart, it immediately seems smoother and more rhythmic. You can actually even see cycles or microcycles appear within this broader move. Now that you've visually seen what Heikin Ashi provides, let me show you some practical ways to use it in your trading. First of all, a large number of price action concepts that you know or that you use on regular candlestick charts can also be applied on Heikin Ashi charts. let's say that you had spotted this resistance here on Bitcoin now turned support, and you believe that this is a key level. Well, there is a great chance that it's also a key level on a Heikin Ashi chart. As a result, you should know that you can perform your price action analysis and identification of key levels directly on the Heikin Ashi chart. And by smoothing price movements, Heikin Ashi charts often tend to make major pivot levels even clearer. You can also use Heikin Ashi directly to time your entries, kind of like a final confirmation signal. If upon touching a support zone, the Heikin Ashi doesn't flip bullish, it means that mathematically, according to the Heikin Ashi formula, the momentum is still to the downside and it's not slowing down yet. Therefore, waiting for a Heikin Ashi flip after we've touched a support zone or at the same moment that we are coming on a support zone, that could prevent you from potentially having bad entries and blindly entering just because we are touching a support. Whereas waiting for that Heikin Ashi flip can be seen as a confirmation or can give you more confluence that the support is actually holding. So what we would ideally like to see is price come down on a support, and on the Heikin Ashi chart see a bullish price move with a candle like this one that has no lower wick. Because these types of bullish candles, the bullish ones that have no lower wick, they tend to signal extra bullish momentum, and they are the strong bullish ones. And the same logic would apply if we are hitting a resistance zone. We would want to see the Heikin Ashi flip bearish with a bearish candle that has no upper wick. If you feel like waiting for the Heikin Ashi move on the same time frame that you're trading could tend to be a bit too slow and give signals too late, then what you can do is go on a lower time frame as we are hitting the support zone here, for example, on daily chart. You could go on a lower time frame, for example, the 4-hour time frame, and wait to spot, for example, an RSI divergence on the Heikin Ashi chart, as well as the bullish shift of the Heikin Ashi with a candle that has no lower wick, such as this one right here. We actually even had an earlier signal right there. And this approach of going on the lower time frame of the support zone to try to see the Heikin Ashi shift, this will be much more reactive. When I do that, I like to, as you saw, complement it with a divergence occurring on the lower time frame before the Heikin Ashi shift occurs. Another interesting way to use the Heikin Ashi is this time to potentially time your exits. For example, let's say you're here in a buy trade and you entered here with a stop below the support and you're targeting whatever recent high. What you can do is use the Heikin Ashi bullish momentum to trail your stop loss. For example, as price is going your way, you can use the Heikin Ashi momentum to trail your stop loss below each bullish Heikin Ashi candles. And when the momentum on the Heikin Ashi chart starts to shift, then this is when you get taken out. Now, this is particularly useful if you do not have fixed targets or fixed take profit, but you like to just ride as much momentum or short-term momentum as the market can give you. Then you can trail your stop loss behind the Heikin Ashi like this until you get taken out. But if you do have fixed targets, and let's say you were in that trade here with a stop below the support area and you were targeting that recent swing high here, then you can also use the Heikin Ashi to capture some extra gains when your potential profit target is reached. So basically, if you wanted to take profits out once we reach that swing high here, then you can use the same method that we just mentioned. That means when price has reached your TP, instead of fully closing the position, this is when you can start trailing your stop loss below the Heikin Ashi candles to try and capture some more points or more pips or some more percentage points. Basically, you capture whatever extra momentum the Heikin Ashi chart can give you once we have reached your TP level. If you now have tons of strategy ideas thanks to this video on Heikin Ashi, I invite you to go and test them directly on Upside. You don't need to know how to code to backtest and automate your strategies. Just write your rules in plain text as they come to your mind, and in under 5 minutes, it'll be ready to use. I hope you enjoyed this video. Feel free to share it. I'll see you in the next one. Bye.